I got some life advice for you. I want you to think about this one, man, while we get everything ready here. Being married is a lot like urinating on yourself. Everyone can see it, but only you can feel the warmth. You know what I mean? You didn't like that? That's good, right? No, I mean it's not a joke though. It's real. That's life advice. It's not a joke. I want you to feel that. Hey, welcome to the Closing Beat, everybody. Happy Monday. How you doing out there? You have a good weekend? I hope you had a good weekend. I had a good weekend. I'm not complaining. We are financial advisors here with Jazz Wealth Managers, and we're a little quirky, so we try to do shows like this and give you tips and things to show you that we're not all loose up in the noggin there. We also do wine and wealth classes every week for clients. And it's really important to me to do that because I like keeping people engaged. I like keeping questions coming. So we do these classes. They're live in our portal. We built our own portal. And the goal is to try to get you to ask questions, whether it's in the class or through the emails and stuff. And this week, we're actually going to talk about portfolio updates and performance. Really big right now. We manage our own portfolios, so we don't go buy mutual funds. It's not as easy for you to just go type in a symbol and go, what's the performance? You can see all of it in your account. But we like to update you on the adjustments we make. Like, why are we doing something, and how do we prove that that's a good adjustment? Transparency is big for us here, whether it's good or bad. I like to share it with you. Last week, we talked about how fund managers scale into positions, right? Because they have large sums of money. So I went through how that works. This week, we're actually going to show you how we do it. So we'll go through that in real time, of course. So that'll be Thursday at 8 o'clock. And also, FinTips is back. Did you notice, right? A while back, we used to do a video every day, 1 o'clock, give you a little tip, something new and interesting. Today, I did that one. I did Roth tips, a specific Roth tip that maybe you didn't know to help you with your kids in college and maybe sneak one over on the government there. So be sure to check that out. And tomorrow is going to be Eric. Eric's our new advisor here. He's great on camera, but he had a little rough go of making some videos. So I want y'all to go pick on him tomorrow when you see the alert pop up that there's a FinTips. He's going to do Tuesday and Thursday this week. Anyways, that's enough of the sales pitch. You know what's going on, jazzwealth.com. Hey, we got a rate decision coming up, right? The Federal Reserve on Wednesday, May the 4th be with you. That is the day that they are going to make their rate decision. And I saw these comments where people were saying this is already the most aggressive tightening that the Fed has ever done. They've only raised rates a quarter point. So they didn't say, well, this is likely to be. They said, this is the most aggressive the Fed's ever been. No, they haven't done anything yet. They raised a quarter point. That's not a big deal. But this week, they're supposed to raise 0.5%. That's going to happen. That's not predicted. That's what we all know and to expect. The Fed's made that very, very clear. And if you're interested, you want to see how these interest rates actually affect your dollars. I did a video for clients in the dojo. It's actually called How Negative Interest Rates Affect Your Dough, but we covered how what the Federal Reserve does and what that means when the rates go up and down. Their rates, actually. All right. To the markets, left to the right-hand side of your page there, you have it's a little reversal, right? So the S&P today is rather interesting. So we broke to new lows. I drew the line here just from a couple weeks ago to show you the complete reversal of all of this. That's not good. When have you ever seen a stock or something you invest in gain in value pretty sharply, then pull back all the way? A little bit's fine. We all welcome pullbacks. They're healthy. We like them. But to erase everything that you just spent a month gaining, that's pretty impressive, and usually not in a good way. Now, the good news is we broke to lows today. That was a chance. You saw the volume pick up under those lows. That's where everybody said, I don't want to be in. If we fall under there, I'm very worried the market's going to fall. So you see this aggressive sell-off. I go to a 5-minute chart. Look at this. All through lunch. All those orders going through, and then all of a sudden people go, wait a minute. Now there's less sellers because all the sell orders went through, right? So now we have this recipe for a little bit of a reversal today. It's a good thing. We'll see how it pans out going forward. But we lost 8.3% in April. We're now down about 13% year to date. That was one of the worst Aprils on record there. In our notes from Jazz, I'm going to see if I can share it here with you. In our notes from Jazz, we actually, it's an email that I do each week for clients, and I actually handwrite the whole thing. It's not like automated or anything. I actually plotted the distributions of returns in the stock market. It's a little geeky, right? But follow me. I'm going to share this with you guys. I'm going to share this with you guys here. So 95 occurrences gain between 1.2 and 3.2%. That's okay, right? That's all good. Well, now look what happened here. We had a loss of 8.37%. 12 times that's happened. Each one of these numbers represents a month. 95 months, 69 months, 54 months. You see the level of data that's in this chart. 12 times have we lost that much. We are on the outside of the normal distribution of returns for the stock market. It's just a fancy way of showing stock market returns there. Now, if you look at just April, here's every April. Not all of them, but I wanted to make it fit on the screen there. So this is April, 8.3% loss. Do you see a loss of more than 8.3% anywhere? No, April's usually a pretty good month, right? So this is really, really odd. This stands out as something that's pretty negative, right? Pretty extended, pretty extreme to the downside. So I shared that with our clients as well. And then I say, you know what? Let's see. We got an interesting week coming up, right, with the Fed, with their rate announcement there. What happens after the market loses more than 5% in any given month? Here's the performance. It's about 50-50, right? So the week following, most of us don't look at the weeks. We're interested in investing, right? But in the week following after that, it's a crapshoot. Right? Sometimes we're up, sometimes we're down. We've got some pretty nasty down moves. We've got some pretty good up moves here. But in other words, you can't predict the week after such a negative response there. And throw in the fact that we have the Fed there. Oh, man, that's a tough one. And friendly heads up to clients, actually. In the Notes from Jazz email, I actually put the performance of every single one of our funds to show how we're not falling as much as the market. In many cases, not even half as much as the market. And that was because of all of our adjustments at the end of the year. So I'm really excited about that. I hope if you're working with an advisor that they did that for you so you're not falling as much. And if not, well, yeah, Jazz Wealth, you know where to find us. Hey, also, let's give you some fun stuff here. So let's do something interesting. In our research site, you can do this yourself if you'd like. I said, hey, how many times the S&P loses more than down 8% or more in a 1 month period looking over 30 years? Is this normal? It's happened a total of 11 times, right? Look at this. A total of 11 times we've lost that much in a given month. You saw some of it on the previous chart there. Average performance going forward, I don't know if you want to bet on that. Right? The percent of time that the next month was positive after losing more than 8%, 54%. You want to bet on that? Does that make you excited to dive into the market here? Really, really tough. Well, I also went forward and I said, all right, that's 1 month forward. Let's look 3 months forward, 6 months forward, a year forward. Again, this is available to you if you're a research member or you're one of our clients, so you feel free to have at it. And do you get excited about 3 months ahead? Average gain, median gain's impressive there. We could still have some serious downside here over the next month. That doesn't mean we can't continue to fall. So call the market extended here. It's proven it can become even more extended, right? Positivity rates get better as you start getting into that 3 month time period, but then it's not the greatest, right? Over 6 months in a year. So we don't have these amazing returns to look forward to now that the market's discounted. And what does that mean for all of you that maybe don't have access to us here at Jazz or don't want to? It means it's not time to dive into the market. It may be time to scale in a little bit, right? But it's certainly not time to dive in there. So be very, very careful. Now, as far as the S&P goes, let's take a look. I'm going to get rid of some stuff because to make this a little cleaner. Today, what you had, the S&P was led by semiconductors and some of the tech stocks, right? So here's the semiconductors. I use the SMH to take a look at that. And you got a decent recovery here, about 3%. That's going to be largely due to NVIDIA. You got about a 5.3% gain there. Broadcom, really all of them. The Broadcom off the 200-day moving average. I saw AMD moving a little bit higher because we happen to have this long in our office trade segment. Texas Instruments, a wild, hot, sloppy mess, but still making it happen there. QCOM, also one that's trying to come out of a downtrend there. So some of the semiconductors playing along. Not all tech stocks. You had Microsoft with a good gain on the day. Alphabet trying to recover. It's very extended right now, so you understand that. Facebook also trying to recover for you. Tesla did a good job today as well, as far as 1 day is concerned. But you didn't really have Apple. You didn't really have Amazon. And Amazon is an incredibly... I'm going to hit start. I'ma hit stop. I'ma hit start. I'ma hit start. I'ma hit start. I'ma hit stop. I'ma hit start. I'ma hit start. I'ma hit stop. I'ma hit stop. I'ma hit start. I'm back. We had the fire marshal come by earlier today. We may have a few extra plugs plugged into stuff that they weren't cool with. So just, we're working on it. We're going to fix. We're all safe. But that might have been our fair warning. Anyways, like I said, there was a lot that the market could have done today and did do by the end of the day, but you just didn't have a lot of those big tech stocks working with you, which is a shame because we had that feeling right there towards the end of the day. We had the feeling of a decent little rally. I'll tell you, while we're doing this here, I want to point out, go over here. I want to point out that if you're looking around a little bit, industrials stood out. It's not exciting, but industrial stood out there just a little bit today, in my opinion. PMI was in there. I'll show you just a couple here because I don't know if this is the start of anything, but it certainly seemed kind of interesting there. And I was my bad. I did that there. There we go. These are beaten down stocks. Careful. I'm just saying. I want to point that out. Also, some of energy and some of the big banks. Right? If we look around to some of the big banks, you got Goldman Sachs. It's not a bad day. These haven't been great lately. Morgan Stanley, not a bad day. Look at the brokerage firm. Schwab, very extended. There's tons of stuff that's very extended here. Also, you got the NASDAQ. It is currently down around 20% year to date. It is trying to rally too. I just don't know if it happens before the Fed meeting, right? What would you do tomorrow? We're all expecting this big Fed meeting coming out tomorrow. So do you think there's going to be a lot of commitment one way or the other? I don't know. I'd be on my toes about that one there, just to kind of sit back and wait. You got the Dow. That's the best year to date with losses of just about 9% thanks to consumer staples and healthcare. Think Coca-Cola, which is pulling back a little bit, but think the United Healthcare and Procter & Gamble. These are your big Dow stocks that have been helping to do things lifted along the way. Oil. Now 5 months in a row of rallies for oil. It's not a good thing there. It's not actually a common thing. The only other time where the price of oil rallied more than 5 months was once, and it rallied 8 months in a row. And it was not good performance going forward. So we'll see what happens there with oil. Oh, I want to point out gold. Gold continues to break down there just a little bit. It's about 1% away from being negative year to date. And they're all kind of like that. Silver, also negative year to date. And copper right around negative year to date. Natural gas, your best performing commodity, it's up 100%. And it's only May, right? It's only May and this sucker's almost up 100%. And we're, I just don't know. It's out of control. And the dollar just refuses to quit, right? The dollar, why should it? Why should the dollar pull back? If you're more of on the economist side of things, give me a reason why the dollar should fall, other than being extended. So I don't blame people that are bullish on the dollar at the moment, but not something I would chase. As far as office trades here today, sat on our hands, man. I only did one trade, which is horrible for me. I like to get to work on a Monday. I get really excited about that. But that was the lesson, really, was trying not to get yourself in trouble, because we've been in a little bit of trouble with we have Netflix and stuff. So we're right there with you guys, having a little trouble. But we've got a post coming up. Cody's going to post the calendar of every single day of the month of May, all the important information and econ news that's coming out, along with some stats for each and every single day. So Cody's going to post that. You heard me? You got me. He's going to post that. So no shock to him, right? You know what's going on. All right, let's move on to new highs and new lows. I believe he had one new high today, and that new high was Valero. It did squeak its way in there at the end of the day. 73 new lows. These are mostly extreme oversold stocks. This is the bottom pickers environment. Not that you want to buy these stocks. I'm just saying this is what the list looks like. Verizon, extremely oversold. Ask yourself, look back. How often has Verizon fallen this much in 6 days, right? Use the research site. You could do that. Go type in there how many times that's happened. You're not going to find it very often that's happened. Amazon did hit new lows, but did recover, so no problems there. The NASDAQ a little bit lower as well, but very, very extended, and Boeing's extended as well. We took a shot on that to the long side, still waiting to get paid on that one there. Stocks in the news today. Stocks in the news. First up, you got Algen. Algen is doing a $200 million share buyback there, and the CEO says, throw me in for $2 million. I'll take 10% of that. I'm sorry, I'll take 1% of that. $2 million he's buying. Good for him, all right? Apple was one of them. The EU's got some issues about Apple Pay there. No country's going to be excited about what they're doing, but Apple will likely fight it off. MGM, they're looking to buy, it's a Swedish gambling app. It's called like Leo Vegas, not Las Vegas, Leo Vegas. So that was in the news there. Lyft, holy cow. Lyft says, hey, we made a mistake on our revenue. It's $28 million, but we made a little bit of a mistake there. We're going to need to update that. Stock pushed to new lows. It did recover with the rest of the market today. You got Spirit Airlines. JetBlue says $33 a share is what we're willing to pay there. That is less than expected. The stock moved lower on the day, and I talked about Apple already. I'll take your questions if I can, because I have a feeling the next time that air condition kicks on, we are going to get booted again. So I'll see what I can do for you there. Kathy Wood doing something. She could use a rally. I've been there. You know what I mean? I've had my days not in the past where it's like, man, I could sure use a rally on some of these picks, but I hope she does get her pick there. I hope she gets the rally. If the average bear market's 262 days, does that mean it's measured from the first day it's officially bear market territory, or is that measured from the start of the decline? So the average bear market is from the moment that it triggers the bear market. So you'd have to be down 20%. And so from the moment you're in a bear market, how long does it last? We often will do those stats when that happens, and we'll say, how long did it take to get to a bear market? And does that have any indication on how long the bear market may be? In other words, if we fell 20% real quick, do we tend to recover real quick, or do we have a longer lasting one? Where are you going? The Panthers on the Stanley Cup? I mean, Jacksonville. You going Jacksonville? First time, man. Don't you want to see them win? Is it not the Panthers? It's their first. Where are they at? Oh, really? I thought they went to Jacksonville. The hockey team? Well, they're in, right? Yeah. You know why I kind of know that, but I'm faking it? The owner of the Panthers, he's selling his house in the Golden Oak community in Disney. That's a gorgeous house. He wants $16 million for that house, man. So I keep up with those kind of things. But yeah, I heard they're good, you know. They're good. Is that who you're picking? You're going with the Lightning. Yeah, so there you go. Cody's got to go with the Lightning there. We've talked about the I bonds before. I'm not really excited about it compared to other things you can do. It's just I don't see the point. You're limited on an investment that's going to be taxed federally. What's the attraction there? REITs have finally fallen because of interest rates. Yep. So if you look at REITs today, they were the worst, right? I believe they were the worst. REITs were, in fact, the worst performer today. 2.6% loss finally. Now, maybe now the banks, maybe the banks will come around now that some of those interest rates are finally starting to hit. SoFi. Giovanni's waiting for his SoFi there. I hope so. I have no way of knowing. There's no way to determine that that's the low at the moment. I would have rather seen the market be weak, or pick a day where the market's weak and SoFi tries to bounce. You want to see money shifting there, and that's one of the ways you could see that. You can do a video about how much will be a right amount for house to come down so that it'll be okay to buy at a current. You're saying, what are you looking for in a pullback of house prices there? Are we even really getting them yet? That's a tough one. We're not even seeing it. Tuition and forgiveness inflationary, is that darn Powell's fault too? Yeah, they're talking more about the paying back student loan, or paying off student loans. And you just know, I mean, I would do the same thing if I was him. But you just know that Biden wants to push something before the midterms. So your clock is ticking, whether if you're one of those that believes in it. I mean, it's coming. Whether they do something or not, the decision is coming. Yep. When do we say priced in? I believe that the first 5 rate hikes are already priced in, because if you look at bonds, they've already adjusted to that level. So the first 5 rate hikes. Now the question is, they're priced in at a 1/4 point for all of them except one. So it's a 1/4 point 4 times and a 1/2 point 1 time which is already currently priced in. Yep. Yeah, I hope so, Doc. Yeah, simultaneously been priced in and never fully priced in. Yeah. The odds do change. People are fickle with their decisions there. I don't have a crystal ball. I got Crystal Louie, man. I rub this head and it comes to me. I know, right? I channel him. Channel it. Yep. How do you look at the VIX? You can decide if it's time to get bullish and buy it. The VIX is just an indicator of fear relative to people buying put options on the S&P. There's no magic number there. They say when the saying is when the VIX is low, you go. When the VIX is high, you buy. But how do you define that? Your perception, right? There's no magic number there. Yeah. Now we have probably like a minute before that flickers again. We're going to get to the bottom of that. Don't worry. We're all safe here. Facebook continuing their thread ahead, considering adding any. Facebook has, it's given a shot. I'll give you that. This is one of the more interesting bottoms you've seen since the unfortunate earnings report there, but no hint at adding yet. I'll let it play out. Yeah. Yep. Okay, let me wrap it up there so we can say that was somewhat successful and be on our way. We'll be back tomorrow to do this all over again. And don't forget, FinTips tomorrow at 1 p.m. That'll be a video that we post, and that'll be Eric's first go of it. Give him a hard time. Make him feel bad, right? People pick on me all the time. Give him some of that grief over there. And we will see you guys tomorrow. Enjoy the rest of your day. Thanks for putting up with us here today, and adios.